Bismillahirrahmanirrahim. Dear students, Assalamu alaikum. Today's lecture is for the class of BCom Part 2. And in BCom Part 2, we have a subject of Advanced Accounting. And in Advanced Accounting, today's lecture is about preparation of the Departmental Accounts. So, this is a very important topic of Advanced Accounting, the Departmental Accounts. Basically, Departmental Accounts will be related with those businesses which have a different segments, which have a different parts, which have a different products, which have a different departments. So, where we need to know not only the total aggregate performance of the business, but we also need to know the individual performance of each and every department, each and every segment, each and every product, or each and every part of our business. So departmental accounts is usually, you may say, concerned with some large businesses which have a multi-line of products, which have a multi-departments, which have a multi, you may say, segments. So in departmental accounts, we have first of all the three questions which we have to be answered. The first question is related with that what we mean by departments, what we mean by departments. Second one, what we mean by departmentalization, what we mean by departmentalization, and third one, the third topic is how we prepare the departmental accounts, how we prepare the departmental accounts. So we have to address these three concepts or topics under departmental accounts. Departments mean the individual segments, the individual parts, the individual products which are sold in an aggregate level of business. Or you may say, when we divide, or you may say, process of dividing the whole business into parts is called as departments, and each part, each individual segment, each individual, you may say, part will be called as a departments. So the process of making the parts to know the individual performance or to maintain more efficiency and effectiveness in the business, we divide the business. This process of dividing the business into parts is called as departmentalization. So each part, each product, each segment will be called as a department. So how we prepare the departmental accounts, that was the third topic which is carried on in the remaining lecture. So first of all, what we gain, what we got in the whole process of this departmentalization. I mean here to address the next topic, that was about what are the advantages of preparing the departmental accounts. So this is a very important topic. Theoretically, we divide the business into parts. This is called departmentalization. And then according to the departments, we prepare the departmental accounts, their individual performance in terms of departmental trading profit and loss account. So what are the advantages which we can got for the preparation of departmental accounts? So there are so many benefits or advantages which we can got due to preparation of the departmental accounts. Number one, the performance of each department can be evaluated separately on the basis of trading results. So, on the basis of trading results, on the basis of a business, we can know, we can judge, we can evaluate the performance of each and every department. That is the first advantage. Second one, it helps the management to decide whether to drop a department or add a new one. So the second advantage, first advantage we have discussed. Second one, that if we want to drop a product line, we want to drop one segment, one department, then we can decide only on the basis of departmental accounts. The profit which is going to be in loss or which have a less profit as compared to other departments, we can drop down that department. So third advantage that can be got through departmental accounts, if the growth potential of a department as compared to each other can be evaluated. So with the level of growth, with the level of, you may say, increase in the trading results, that can only be measured, that can be only evaluated only the basis of departmental accounts. The results can be compared, and through their department results we can evaluate the growth, what departments are growing on or what departments are growing down. So this can also be evaluated through the departmental account. The next topic that was relating with the department benefits, that was more detailed information can be provided to the user of the accounting information like shareholders, investor, creditors, owners. So in terms of, in shape of departmental accounts, more accurate or more, you may say, detailed information can be given for each segment or for each department. So the next benefit which we can be got through the preparation of departmental accounts is that departmental manager and staff can be rewarded properly on the basis of the results of departmental accounts. So if we want to reward, if we want to give the bonus, if we, you may say, we want to compensate our employees, so that can also be made according to the criteria of the departmental accounts. The departments which have a more profitable, which have a more growth, which are more, you may say, profits, that can be rewarded betterly as compared to the other departments. The next benefit that can be got, that was, it helps the management to determine the justification of capital employed in each department. So the business segments which have a more profit can be invested more, they can be provided more capital to increase their growth, to increase their profits. So the next advantage which can be got through the departmental accounts, that it helps to calculate stock turnover ratio of each department separately, and the efficiency of each department can be re-evaluated. So it means different ratios can be employed separately to each department to know the individual performance. The last benefit is that departmental accounting information also provides a basis for intelligent planning and control. To control more betterly, to plan more betterly, we can use the departmental accounts so that we can be evaluated and we have a better control, we have a better results in future for our trading results. So these are the advantages of departmental accounts. Now we discuss some other topics of the departmental. So after discussing the advantages of departmental accounts, now we discuss the methods of preparing the departmental accounts. Methods of preparing departmental accounts. Basically, there are two methods of preparing the departmental accounts. The first method is to record separate things for each and every department, and the accounts like profit and loss account, like trading account, like balance sheet, that can be prepared separately for each and every department. So trading, profit and loss account can be prepared separately for each and every department, and we have to maintain each and every accounts record separate from each other. And second one, the second, you may say, method for maintaining the record of departmental accounts, as the record can be maintained collectively as a common, but we can be prepare departmental account on columnar forms. So in columnar forms, just in one trading profit and loss account, we can prepare the separate columns for each and every department. So that is called columnar form departmental trading and profit and loss account. If we see at glance level the trading and profit and loss account for the company as a whole, trading and profit and loss account for a company as a whole. When we say the company as a whole, the common record of each and everything for that common business, we prepare, yeah, or we have given a one trading profit and a loss account. Normally it have a following format. So this is our debit side, the expenses, rupees are amount, revenues amounts are rupees or in any other currency. In this departmental accounts, we have a two parts. This part will be called as a trading part, and below part, the second part will be called as a profit and loss account. So this portion will be called as a trading account, and this portion will be called as a profit and loss account. So we are, first of all, we are ignoring the departmental accounts, but we are preparing, we have a format of trading and profit and loss, a company as a whole, a common trading and profit and loss account. Number one, we have a opening stock, we have a purchases, we have a direct expenses. So these are the three items reported on the debit side of trading account. And on the credit side, we have two things: sales as a whole for the company as a common, and we have a ending stock for the company as a whole. If revenues are greater, then we got here the amount of gross profit. We have a amount of gross profit, there will be a total, and total will be equal, and balance charged to the gross profit. Then gross profit carried down, and from the debit side of profit and loss account, this is our profit and loss account. In profit and loss account, we, you may say, report all the expenses. All expenses mean all the selling expenses, all the admin expenses, and all the other expenses. All expenses will be reported here, and then we got the amount of net profit. So net profit will be reported here. This is some common format of trading and profit and loss account. So after discussing one common format of a trading and profit and loss account for the firm as a whole, now we are going to start a next step, that is the departmental accounts. For departmental accounts, we have basic three issues. The first issue was the accounts, those are recorded separately. Accounts are recorded separately. So this was the first issue in preparing the departmental account. Second one, some accounts or some amounts are accounts which are recorded as a whole, are recorded as a common. And third topic relating with the departmental accounts, the third issue, that was a format of departmental trading and profit and loss account. So these are the three main issues. So one by one I discuss these issues. First of all, accounts are recorded separately. It means some accounts, some amounts which must have been recorded separately. For example, we have three departments. We have a department A, we have a department B, we have a department C. So for example, in department A, we have a selling of books, we are dealing with the books. In department B, we are dealing with the stationery, and department C, where we are dealing with the gifts. So the first issue, that some amounts, some accounts which are recorded separately. For example, the opening stock of each and every department must be recorded separately. At the beginning of period, at the start of period, what is the opening stock of books, what is the amount of opening stock of stationery, what is the amount of opening stock of gifts. So this must record be taken as a separate. Then what is the amount of purchase of each and every department, so that must also be recorded separately. And then amount of sale of each and every department, department A, department B, department C, and fourth one is the amount of ending stock. So these amounts cannot be, you may say, divided. These are normally be recorded as a separate record for each and every department. And second topic regarding the second issue, that was some accounts, some amount, some expenses which are recorded as a whole. For example, this is our business, this is our shop, this is our firm. So we have a single amount of rent for the whole business. So we have a one whole amount of rent, for example 1 lakh. We have a advertisement for the whole shop, and we incurred a lump sum amount of that advertisement. For example, the manager of the shop have paid a lump sum amount for the whole shop. For example, the electricity bill of the whole of the business. For example, you may say other utility, telephone, or other expenses or accounts which are recorded, which cannot be recorded separately. Even these are, you may say, paid. These are recorded as a whole, as a common for the business. So what is our task here? If these accounts or these expenses or these accounts are recorded as a joint, as a whole, as a common, so we have to divide, we have to allocate these expenses among the departments. On what ratio? On what basis? So this is our next topic, how we record, how we divide, how we allocate these common expenses among all these departments.